Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with the main man, all the way from the sunny city, Philadelphia. Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to help answer questions, give you advice. There's the disclaimer.
Perfect. So what's going on post-election day pre-market?
Yep, let's take a look at that. And anyone joining for the first time, this session's really to help answer questions, market Chameleon tools, data analytics. If you want to ask questions about strategies or something you've seen, you're welcome to do that. Two ways to ask questions. One is to put them in a live chat on YouTube. Will's watching them. He'll read it back. He'll read those back to me. If you want to come on a show live, we also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you get to Zoom, click on the button, raise your hand. When you do that, it'll prompt you to turn on your video camera. You don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question live. While we're waiting for questions to queue up, we'll take a look at pre-market report, see what's trading in the pre-market hours. If I don't have any questions, I'll take a look at the historical stock market moves prior to the release of the CPI. We've got the CPI numbers coming out tomorrow. We'll just get some insights. What did the market tend to do around the most recent CPI numbers? After that, I could also go to the options chain, set up a thesis and a trade thesis, then create an option strategy around that thesis. And we could then analyze it, run an option profit calculator, look at a diagram, and analyze it from that way. So this will be just a strategy we can create that has multi-legs. And I'm going to try to do it in a different way. Instead of using just one expiration, I might do it cross expirations, and I'm going to do it cross strikes. Okay, so we'll try to get all that in today. Sound good, Will?
Perfect.
So pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers in the pre-market, our biggest percentage decliners. Here I see 35 stocks made our percentage gainers list, 110 on the decliners. From this perspective, looks like we're lining up for a more bearish bias at the open. I'm going to use the filters for this report to narrow down this list to only S&P 500 stocks. We want to take out ETFs, leverage products, closed-end funds, preferreds, rights, units, all those. Let's take them out, look at only S&P 500 stocks to get a sense of what's going on there. And to do that, I'm going to use this filter in ETF. Let's drop it down. You have a list of stock ETFs you could select from. Let's take SPY over here. That's the S&P 500 ETF. When you select that, the list below will get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. Here we see 1 made our percentage gainers list and 14 on our percentage decliners list. From this perspective, looks like we're still setting up for more bearish bias at the open. Of course, here, big one, Disney, here down 8.2%. In the pre-market hours, trading 91.74. And this little alert is letting us know it was earnings yesterday after the market closed. That stock's reacting to that news this morning. And I guess that, they did have some disappointing numbers, especially people, I think, were expecting better numbers in their streaming business, right? They own a bunch of stream, Hulu and so forth. Those numbers didn't look as good as I think a lot of people were hoping for. Let me see, to save time, Will, if you don't have questions, because I want to cover those two topics today, I'm going to move on.
Perfect.
Let's go to SPY. So SPY, S&P 500 ETF. And we're going to take a look at how SPY performed around the most recent CPI numbers, right? Those are numbers tracking inflation. One's coming out tomorrow. So I'm going to go here on the event-driven historical insights. I'm going to drop this down. Let's pick this consumer price index. I selected the CPI. I'm going to reload that report. And now what we get is a history over here. These are the historical dates where the CPI came out at 8:30 a.m. So you can see that 8:30 a.m. these numbers came out. And we see how did the market react if we use SPY as the market benchmark. How did the market react leading up into this number? So starting out 2 weeks, week, 3 days, 2 days a day. And then I'm going to open this up. This is the day of. And then how did the market do after days and weeks after that CPI number? And of course, you know, when we had a CPI number that was pretty tame, it probably wasn't as relevant as it is today, because now inflation is high, and that inflation number is impacting lots of things in our economy, you know, interest rate policy, monetary policy, and so forth. So let's take a look at the summary stats here. And we're, you know, right over here, the day before the CPI came out. If we look at the last 12 events, we see that on average, it was neither a gain or a loss. A little bit more often, the market was down heading into that number than up. 42% of the observations, stock was up, 58% was lower heading into that number. What happened after that number was released? Well, that was here, because we're going to look at the opening gap first, because that number is released at 8:30. Then the market opens at 9:30. Where did the market open after the release? Okay. And here we see so far, on average, market lost 0.6%. 67% of these observations, market was down, 33% was up. Of course, this is all data dependent, so that direction will depend on what the CPI number actually is. This is a historical view of what happened in the most recent history, and we could get a sense of what was the average movement, up or down, right? So this is that absolute average move. What type of volatility can we try to anticipate heading into that number? And if we took all these moves in the morning and converted them to positive moves, took the average, we see the average move up or down 1.2%. So pretty big move in the morning, right? Over 1%. We see high move 2.3%, low move 0.3%. And, you know, this is the best opening, up 1.8%, worst opening down 2.3%. So we get like a range in the last 12 instances that the CPI was released, right? Heading into earnings the day before, we do the same thing here, and that would be today, right? So this is one day before. We see that average move for the full day, also up or down 1.1%. And we could see the range here. Best move up 2.7%, worst move down 2.4. What about the intraday move? So we open up or down, right? We open, markets up or down. What tends to happen the rest of the day? You know, we open, then VWAPs kick in, everybody's digesting the news, market's gonna move around. Let's take a look at those ranges. So from the open, on average, from the open to the high of the day, we see gain of 1.1%. From the open to the low, down 0.9%. So that's, you know, it's a pretty decent range, right? Even after the open, on average, you know, break even, 58% of the time drifted lower, 42% higher. Average drift up or down intraday, 1.2%. So intraday move, we get a morning move, but the intraday move can be significant too. You see another 1.2% up or down, with the best move up 4.7%, worst move down 2.1%, kind of favoring the upside there in the last 12 instances, right? So you could see here, even though last time we were down 2.1%, it rallied all the way back up, closed on the day up 2.6%. So big move intraday. All right. Afterwards, it kind of seems like the market cooled off on average, and you know, down 67% of the time, down the next day, 33% up for an average loss of 0.9%. Again, we're just looking at the return distributions around that CPI number, using the last 12 observations. Okay. So if there are no questions, Will, I'm going to move on to the options chain.
Sounds good.
Options chain.
Actually, we just had a question pop up. Sorry, there's a little bit of a delay. Robert's asking, does the chart indicate what the CPI report was as well as what the market did? I guess, Robert, are you asking the number?
The actual number? No, this chart doesn't. No, it doesn't show the actual number. Not on this report.
Does it tell us in that report what the at the money straddle is telling us today? What they're implying? The closest at the money straddle, what's it applying?
So it will show us. Actually, now they brought it up, just to show you this. This is also, you could look at the option strategies around that event. So if we just wanted to see if you did the at the money straddle day before, sold it the day after, right? Let's do it from the buy side here. This is what happened in the last 12 instances. So let's say right before, you know, the close, you bought the straddle, next day you held it all the way to the end, sold the straddle, next day, what did that look like? And here we see it was a 50-50 as far as, you know, percentage of times it was profitable versus percentage of times it was unprofitable. And on average, it returned 17%. That's probably because here's a big one here, you know, that you could see here that on September 13th, if you did the straddle, this is the before, this is the price of the call and the put before I'm hovering over. And then you could see, you know, it was the 411 strike. I can't move it. Oh, I can't move it down. So here's the call and the put on the September 14th, 411 strike, right? The underlying the day before was 410.71. So the call was let's say 365. The put was 387. And then the next day, the CPI was released. The market was down 4.3%. Okay, that's what happened. The market was down 4.3%. So you could see that those those calls went from 365 to basically zero, but the puts went from 387 to $18, let's say. All right, 17.75. And even if you bought both of these, whatever it is, over $7, next day 17.75, the straddle return, or here you go, the return $13.91 on the cost of the straddle, which was a 360% return on the invested capital, right? So that one pulled up, but we had some big down ones too, right? Last one, it was down 90%, right? Sorry, that's the put here. Sorry, that's the straddle. You could see the last one, it was down 90%. So if we look at the call and the put, each one around $5.20. So let's say 10.40. The next day, what happened was, oops, let me just trying to slide this down. Okay, next day. So this was looking at the 357 strike, October 14th. We see that the stock went from 356.85 to 365.89, up 2.5%. But it, unfortunately, it wasn't quite enough, right? So we see that the call went to 9.24, put to 48 cents. That resulted in a loss in that straddle of 5.5%. So you see, lost 5.5%. Oops. Because, sorry, you have to go fast on this. Yeah. So it wasn't enough of a move to cover the cost of that straddle. The straddle mood decayed, but it turned out to be a loss of 5.5%. So here, the biggest one I see 68% loss. So you could hover over it, look at what the stock did that day, and what the options did. And then these are the out of the money puts, and the in the money, and the at the money puts, at the money calls, out of the money calls. All right, and here's the stock move for each one. If you wanted to look at that options chain, you could open it up, and I think it's. Did I think my thing is slow. All right. All right, you should be able to open it up. I'll take a look at that, but let me see if it's, oh, there it goes. It takes time to load. So this is the before options chain on the left-hand side and on the right-hand side, the day after. So you can see all the prices, how they move. So you see what happened to the 338 strike. If you want 342 strike, this is the before, this is the after.
Oh, that's amazing.
Yeah. So very good feature. I should probably come to these more often.
Well, like Rob says, it's an amazing report. That's awesome, dude.
Yep. All right, so let's take a look at that 10 minutes.
I don't know if you want to get into a crypto discussion. Rob had a question.
Okay.
And if Rob, you want to come on and ask more about it, but he said, Will, would you and Dimitri comment? And I'm chuckling because I called Dimitri probably at, I don't know, what, 9:30, 10 o'clock last night to discuss this with you, D?
Yeah.
Would you and Dimitri comment on how the crypto collapse of FTX may affect the market? SBF lost 16 billion overnight. That's the founder of FTX, Sam Bankman-Fried, who is a big, probably the biggest character and, one of the biggest entrepreneurs in the space. It wiped out, 95% of his on paper wealth overnight. It's an amazing story.
Yeah. And look, we're not heavily into that space. So I don't, I'm not an expert on these cryptocurrencies. The blockchain itself is very interesting. We mentioned about it, some of the potentials in the financial space. So as far as, the blockchain being used in the financial space, I think there is a lot of opportunities, especially, dealing with clearing, keeping, accounting and ownership of digital assets. As far as, his exchange, I don't even know what really is going on. I know the Binance is going to take it over. There are exchanges that are international, then he's got a US exchange, and how they all operate, I don't know. There's complexity because these are not regulated normal run exchanges, right? These are unregulated exchanges, really, that they're running. And I don't know how it's not like those accounts are SIPC insured, right? So there is that risk as well. I don't know how they separate their customers' assets. There was like a freeze. They had a liquidity problem. People were pulling out $7 billion in one day. Then he had to freeze it. He couldn't let more people pull out. It was kind of like a run on the bank.
That's exactly what it was.
It was a run on the bank. He needed a bailout. I guess maybe in some ways for those customers, if Binance takes it over and makes them hold, that could be positive. And maybe that's one of the reasons even Binance is doing it. It's a big exchange. They don't want this to spread. It's contagion, right?
Well, remember, FTX purchased 2 or 3 exchanges, just a couple months ago.
He was purchasing people that
to actually stop the, volatility in the marketplace. But
yeah,
it is interesting that it doesn't look like it's spread at all to, the lit mark, to our markets, right? It doesn't, that volatility has not, it's obviously still so small and so few potential players that doesn't seem like it's probably a big deal.
No, maybe it spilled over to Coinbase a little bit, so Coinbase, definitely is probably getting somewhat impacted because, look, people are holding their money in there. They're holding their coins that have value in there, and if you lose that trust, if you feel like you're not going to get it back out, it could be a pang. You don't want to be the last one to try to pull out. That's the problem.
And my brother, who has been on the show years ago, used to help us, and he's we know he's big in the space, right?
Yeah,
he's been saying for 2 years now that self-custody is the only way, which doesn't lead to a growing. If people have to self-custody all their coins, it doesn't make it a very usable system. The beauty of it is that what was happening was exposed because the way everything is constructed on the blockchain, someone was able to analyze all the wallets and realized that the majority of the balance sheet in FTX was was the FTX coin, right?
Yeah.
So if that got liquidated, it was a real problem, and it literally happened overnight.
Right. And that's the thing, like these cryptos, these coins right now, I'm not sure what they all represent. I know kind of what Ethereum represents. I know Bitcoin, like these other ones, there might be some interesting things out there. I don't know that much about all these coins or what this FTX coin even represented, because what is the underlying value of that coin? I'm not sure. I think to give you
I think it was a reward you got for being a member of the FTX and putting your money into it and holding it there, and that's how they paid their interest. But it was built on it was like all the coins, they were built on the blockchain, right? So you could
Right.
identify how many coins they were, how many were in the system, who owned them, what wallets owned them, and
Right. Right.
so,
Right.
which
I
is the
think they
beauty of
got
the
like
blockchain, right?
discounts. Yeah. And right. So far, I think that we haven't seen a very good use case out there yet, but it's still it's in the early development. It's in very early development. And we haven't seen a very good use case, but I think that in the future we will. I think that there will be good use cases um, in that blockchain. And I think just recently, right, that Ethereum had that upgrade where now it's more scalable. They've upgraded um, to a system that's a little bit different than Bitcoin, where they're not using as much energy to validate these transactions. It's going to be a little bit. It's going to be more scalable, and then you have these like, what are the Maytag or Polygon that sits on top of it that is even more efficient at processing transactions. But I do think that it's going to go through a phase. We saw this in the internet bubble, by the way. Will and I, when we were trading in the early years of the internet, there's massive enthusiasm, and people were throwing, lots of capital at companies that were really just had the name .com after them, right? You couldn't figure out, well, does this company even like have a product yet or a service, or they were just like these .com everywhere, and they were just going up really fast. And that's because people thought that the internet offered great opportunities in the future, which eventually did, right? We didn't have the Amazons and the Facebooks yet. We didn't actually have those use cases at that time. But the early investors, I think that the early investors who might have been right about the internet actually ended up being wrong in the early stage. As investors, they got hurt, but they did what did they do? They set the foundations. After that bubble burst, things calmed down, but there was still, the infrastructure was still being built. The ideas were kind of out there, and they set the foundation for that future growth. And that's kind of what I feel like maybe the blockchain is at right now. It's going to have issues, for sure. They're going to have a lot of issues that they're going to need to work out along the way.
Yeah, and the speculators are getting, hurt right now. Like the people who are just speculating on all these different coins have been hurt, and these exchanges who are processing these trades are now getting hurt, right?
And I would say like the speculators here, I don't think it's not going to be a contagion. Like when we had the housing bubble, we felt it everywhere. We were feeling it in areas of the economy that, we're not even related to housing, but it pulled everything down. Because
the only way it could be contagion is if there were hedge funds that were heavily leveraged up in the crypto space, that they would have to then start liquidating positions that were still liquid, i.e. the stock market, the bonds, that type of thing. And it doesn't look like that's the case.
It doesn't look, no, I think that a lot of the pain will be maintained within those contained, in that investment community. There might be some spillover, but not.
Yeah, it's the people who've taken. I mean, there are a lot of people who are, and I think that's why. I mean, it's amazing to me how well that the two big ones have held up, right? It's not like Bitcoin's down 50%, right? Or
I don't think Bitcoin, Ethereum, right, because those are different projects. These, look, I don't think that if FTX goes out of, completely out of business, or Binance, like we're going to see, JP Morgan or Bank of America in trouble, right? I don't think that's going to happen. And I don't think that we're going to see, credit freeze up, or, people having to sell their, Amazon and Apple stock to cover losses.
Biggest risk is the one we're looking at.
The
coin that you have.
Coinbase, yeah.
I mean, if it moves, if it
Coinbase
moves to Coinbase, there are a lot of funds that own Coinbase. There is a lot of public ownership of that may also own Bitcoin. That could maybe have,
Right.
but listen, the market's already gotten destroyed. So people have been either getting out of some of those positions. You would think.
Yeah. Here's another one. People have been speculating. This is a MicroStrategy. So they're coming down because people are basically, I think, buying MicroStrategy on thinking that they're buying Bitcoin, right? It's like
they are. It's almost a Bitcoin holding company.
Yeah, like a leverage bet on Bitcoin, which if you're going to do that, you're better off just buying the Bitcoin, in my opinion, than buying MicroStrategy.
Actually, Michael McRae sent over. Michael Saylor, founder of MSTR, was long almost 130,000 Bitcoin, an average price of like 25 and a quarter.
Yeah. So those,
if he has to liquidate, it's probably going to put some pressure on Bitcoin. But again, the overall market and the economy, I think the great thing about these products is they're traded everywhere, right? It's like global ownership. It's not, it's not one big bank or, a country, or it's people have gotten hurt, but it's spread out over the entire global economic.
It might have some effect, but not like a 2008 effect. I don't think, not like that kind of effect. It might have some effect. There's a lot of people who invested in there are going to get hurt. There might be jobs good paying jobs we might see layoffs. And there might be some specific firms that have much more exposure, like the two we just showed in that space. They might get hurt. But I don't know if it's enough to like pull the entire market down 20%. Not like that.
Yeah, doesn't look like that way. I mean, it's a great piece of living. What will be history. I like you. I think in 10 years, the things that will be happening on the blockchain could be revolutionary potentially. But this is just part of the cycle. Great job,
Right.
D. We're 2 minutes into the open, and we did it. I mean, we talked about it for over 10 minutes, which is pretty cool.
Awesome. All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Thanks, D. Trade and Peace Chameleons. Have a great day, D.